Welcome, everyone. We are very pleased that you can join us for this panel discussion on embedded finance, the next evolution for fintechs and retailers. So the Fintech and Retail Tech Tour is a 3-day digital event organized by Business France in the UK and in Ireland to connect French tech companies providing innovative solutions to retailers and financial services companies. So the objective is for the French delegation to meet with decision makers and get insights from local experts on several topics, and today, more specifically on embedded finance. So feel free to use the chat to ask your questions, and we'll relay them to the panelists. And there will be time for Q&A at the end of the conference. You'll also have the opportunity to meet with the French delegation on the Swapcard platform, so make sure to visit their booth and to connect with them. So now I will let Peter Oakes, founder of Fintech Ireland, introduce today's panel discussion.
Good afternoon, everybody. Thank you, Pauline. Thank you to the team at Business France for the kind invitation to be involved with an excellent panel today on embedded finance. And welcome to all those that are watching the stream. Welcome to the virtual delegates that are touring the UK and Ireland. It's a very interesting time here, France and Ireland. We actually have a new French ambassador to Ireland that started in recent weeks as well. My work with Fintech Ireland, which is the hat I'm wearing today, relates to a network that we established that helps track and map Irish fintech, but also helps those fintech expand overseas with introductions, and also interesting fintech and retail tech that look towards Ireland. And so it's great to be having the conversation with you today. As I said, we've got an excellent panel, and I'm about to introduce them to you by name, and then each one we will turn to, and they will then do an introduction of themselves and what their business does. We are relying upon the technology that is working. All things being equal, we'll be with you, and I'll be with you to the very end. If something does hiccup and I happen to drop out, which is highly unlikely, someone else will fill in to ensure the conversation, the free flow conversation continues. So without further ado, what I'd like to do is I'm going to introduce you to the panel, and you'll start seeing them in just a minute. But if I may introduce them first by name, we have Ruth Foxe Blader, from Anthemis Group, joining us. We also have Christopher Holloman, who is CEO and co-founder of Divido, Todd Latham, Chief Growth Officer at CurrencyCloud, and also Charles Pissavin from TransferMate as well. So, if I may, folk, could I actually first turn to Ruth and ask you, Ruth, could you maybe just do a brief introduction of yourself to the audience?
Yeah, thanks very much. So my name is Ruth Foxe Blader. I'm a partner at Anthemis. Anthemis is a sector-focused leading fintech VC firm. We are based in New York, London, and Geneva. We have more than 100 portfolio companies, and I specialize in investing in insurtech.
Thank you very much, Ruth. And also you have a great Twitter handle there we were discussing earlier, Foxe News, but it's FOXE_NEWS, if you'd like to follow Ruth on Twitter. May I also now turn to Krista Holloman from Divido. And Krista, would you mind introducing yourself, please?
Sure. Hi, everyone. My name is Krista Holden, the CEO and co-founder of Divido. And Divido's vision is to build the world's leading white label platform for retail finance. So we help banks and retailers offer loans to consumers who are about to make purchases without them having to build or maintain any of that tech stack themselves. We've been in business for 6 years. We have about 1,000 clients, including retailers like BMW, banks like BNP, and third parties like MasterCard and Shopify.
Krista, thank you very much. It's a very interesting area, especially this week. Lots of deals been announced in your area, banking as a service and embedded finance. Just going to turn over across to Todd Latham from CurrencyCloud. Todd, if you can hear me, would you mind introducing yourself?
Yeah, hi everybody. My name is Todd. I'm from CurrencyCloud. I'm the Chief Growth Officer. CurrencyCloud is a cross-border payments platform that we embed into financial institutions around the world. So we are embedded in about 500 companies today, ranging at the top end from large multinational companies like Visa and Santander through to very small companies who are looking to embed cross-border in their offering. And actually, we know Anthemis very well. Anthemis is an investor, along with many other notable companies.
Thanks very much there, Todd. I'm just being mindful of keeping my microphone on mute in between when others are talking. Sounds like you're getting a bit of feedback from me, so I may switch to the headphones after while we're introducing Charles. Charles from TransferMate. Charles, would you like to introduce yourself and what TransferMate does, please?
Of course. So first of all, thank you very much for the invitation. So I'm Charles Pissavin, Business Development Manager covering the French market. I'm working for TransferMate for now a year. To give you a quick overview about what we do, TransferMate is a globally regulated B2B payments technology which improves the international payments process for banks, companies, and software partners. What we do is help companies to send and receive international payments by reducing cost, improving transparency, and eliminating friction points thanks to our worldwide regulations.
Thanks for that, Charles, and hopefully everyone can hear me. I've moved to a headset here. So, as I was saying, the size of this industry is anybody's guess. We see lots of figures saying that embedded finance is worth as much as 7 trillion over the next 10 years. We have some people saying that figure has already been achieved or is likely to be achieved a lot sooner than that. So I think actually the first question and the first person we should turn to is Ruth. And Ruth, I wonder, with wearing your investment hat as well as your technology hat and understanding of financial services and fintech, would you mind just giving us a brief overview of what do we mean when we talk about embedded finance? It does seem to me to mean different things to different people. And is it possible to put a size on the market itself?
Yeah, so we've been thinking about this concept of embedded finance for a couple of years at Anthemis, and we actually published a white paper on the topic when we sort of crystallized the term for ourselves. I think it really is the idea that the financial system is really the nervous system of the world in many ways, and much like the communications infrastructure or energy infrastructure are just deeply embedded in the way that everything works. And so we started to realize that the thing that 21st century technology has enabled us to have is really kind of financial transactions, which in some ways become invisible. They happen at the points when customers need them to happen, and they facilitate commerce and also information flows and really, the entire economy in the 21st century. So what we've done is really start to think about the financial system as a system which, becomes, as I said, kind of invisible, sort of augmented to fit the in situ needs of the consumers, and also of, in some instances, the financial institutions that facilitate these transactions.
That's great. Thank you for that, Ruth. And tell me, just before I turn the questions over to somebody else, the white paper that's still available on your website. Am I correct?
Yeah, and it gives a sense of a couple of things. I think, as we as fintech investors start to broaden our thesis on this basis, we look at a lot, a lot more verticals where we see financial transactions being relevant, things like mobility and food and agriculture, health and wellness, urban planning and real estate, supply chain and logistics, and as I said, energy and media. So we start to see those not as discrete segments that aren't investable to a fintech investor, but rather places where actually financial services are highly relevant, and there might be propositions that we will look at as financial services companies that really kind of are very adjacent to those spaces as well.
Perfect. Well, thank you for that. So I guess one of the things I'm sort of thinking of is the first experience many of us may have had is that this clunky experience when we go and buy something off an e-commerce website and then we're redirected to a third-party payment processor, and then suddenly the whole experience goes askew, and it's really that sort of at a root level, that very seamless experience for the consumer, I imagine, is one of the positive outcomes of embedded finance. Turning over there to you, Krista. Krista, you were quoted in an article that I came across on Citibank, actually, and you were quoted as saying there was a time when banks wanted to build and maintain all their systems in-house. It seems like just yesterday, actually, Krista. But trying to do everything, we can leave the core exposed to nimble competition, which we're beginning to see in the digital lending space. And as you mentioned, your business is all about establishing banks with an API-driven way to connect the balance sheet to merchants and consumers. But could you expand on that a little bit more for me, Krista? Doesn't the same apply also to e-commerce providers that seek to do more than what they're good at, which is e-commerce, and then they also try and control the payments piece as well? Over to you, sir.
Yeah, no, I mean, I still firmly stand by the quote that you found there, that banks typically want to build and maintain everything. But I think the last few years they've come to the realization that actually they're so busy doing core stuff, whether it's adopting to new laws and regulations like GDPR or other more critical activities, so they can really benefit from leveraging an additional pair of hands or resources from other companies that can help them solve very specific problems. There's better use of their time to focus on what they're good at and to bring in third parties to help them where they may not have the relevant experience. And I think banks are the first to confess this themselves, that when they do stuff, it tends to be over budget, it tends to be over time, it tends to be a little bit underwhelming at the end. So partnering with a third party is already operating in the market that can prove that something is up and running and working, just takes away that degree of uncertainty that otherwise they would have had to manage. So I think that still very much holds true. And I think it's fair to say that banks are not very good at understanding retailers and the challenges that the retailers have when it comes to helping consumers transact and so on. It's so many degrees removed from their core that they really benefit from having third parties helping them in that. And I also agree with your point around e-commerce platforms. We see, for example, Shopify in the US, where they are starting to introduce finance as a payment option, which perhaps isn't sort of core to their business model. And that's also why Divido is not just servicing retailers directly, lenders directly, but also helping intermediaries to mobilize these types of facilities much quicker. So yeah, I think a lot of people have to try first, maybe fail first, before they realize the benefit of a third party. But those that already see the writing on the wall, they might leapfrog and go straight to working with a dedicated third party specialist.
Yeah, and look, as some people can tell from my accent, although I'm often confused for a New Zealander, I'm actually an Australian. I watch the Australian news when I wake up, then I watch the European news during the day, and then back to the Australian news the next day. In Australia overnight, one of the largest banks, one of the big pillar banks, has actually just finally bitten the bullet and partnered with a buy now, pay later enterprise called Afterpay, which actually has a presence, I believe, in the UK as well. I'm not involved or familiar necessarily with the overall business models, but I thought that was a very interesting play there by one of the pillar banks. What I mean by that, it's one of the 4 largest banks in Australia, and it finally figured out that actually it couldn't do this itself in the same way that it could do through partnering. So I thought that was a very credible and current example. Also, while I'm thinking here, for those in the audience, do start getting your questions into us, because most likely you're thinking of those as we're doing the introduction piece. I'm going to turn over across to Todd now. And Todd, again, following my areas of research into all you great panel members before today, I was taking a look at the CurrencyCloud blog, where you're talking about embedded finance, and it not just being about consumers, but also transforming the B2B payments market. Now, Charles is going to be coming in next, and he's very much in the B2B payment space. But would you mind elaborating a little bit more on the opportunity for B2B and why it differs from a B2C offering?
Yeah, absolutely. So I think B2B is often one of these areas that's kind of hard for people to get their heads around. We can all imagine ourselves as consumers, going and buying something and using Klarna at the checkout process, for example, or we can all, even going back into time, when you buy a car and you've got a loan financing option already actually embedded in the sale of the car. As consumers, embedded finance is something that we've had for a while, albeit in a low tech form. And I think what Ruth was seeing today is, what she's describing is a much more high tech and therefore seamless process for consumers. The B2B world's quite different though, and I'll just use a very simple money transfer case. So if you think about money transfer, we do a lot of consumer stuff as well. We're always via a business, so we're B2B to, we call it B2B to X, B2B to consumer, or B2B to B. And in a consumer proposition, what you might see is a Polish migrant worker working in London who's remitting money back to their family in Poland. And the transaction looks something like this. They'll go onto the website of a remittance firm. They will say, I want to send back 500 Polish zloty. The conversion is done within the transaction. They send a WhatsApp to mum saying, Mum, did you get the money? Mum sends WhatsApp back saying, done it, all done. Very simple process. In the B2B world, it ain't like that. And I think there are some properties around the B2B space which are fundamentally different. The first, you've got a CFO. And if anything we know about CFOs is they like control. So they actually don't like seamless experiences. The idea of a direct debit or a pull payment from your bank account if you're a CFO is a total anathema. We're like, why would you give somebody that control over your money? You control the money. That's your job. So first of all, you've got this key stakeholder in any financial process that you've got to be interacting with, and you've got to make sure that you're catering to their needs, which are about giving them control within the process rather than taking the friction out of the process. So that's a fundamentally different proposition. The second thing is businesses are complex. So I'll give you an example. We might see a firm transaction on our platform, and it's a firm based in France, given we're on the event we're on today. And so you've got a French firm who is selling, bicycles to the US. What they want to be able to do is, from their wholesaler in the US, is they want to be able to export the bicycles. They want to be able to invoice that US customer in US dollars. They want to be able to give the wholesaler a US account number, because you know what happens if you're in the US and you get a cross-border payment request, your bank sends you a check in US dollars. And you can imagine you go to your local branch of BNP Paribas and you're like, here's this check in US dollars, and you see what happens with the teller. That needs to be automated. But you might say, it's a French business. Well, actually, whilst I'm supplying parts to bikes to my wholesaler in the US, I'm buying my brake parts from a company in Kansas. Why on earth would I repatriate my funds back into euros, put them into my bank account, to then convert them back into dollars to pay back out to my supplier in Kansas? You of course wouldn't do that. And so businesses are just way more complex. They batch things up. They move treasury movements of money as opposed to individual transactions. They have much more requirements around data, around reporting, around control. And you see that from retail propositions that try and move into the embedded finance world. They really struggle because actually the business model is fundamentally different. Yeah, you're on mute, Peter.
That nasty chat message I got reminding me to stay on mute has got me petrified, so I overstay on mute. Listen, Todd, you're no spring chicken yourself, so I can say this to you.
Wow.
Yeah. I remember the .com boom, and we were talking about B2B then and B2C. And of course, when the dot-com bubble burst, B2B meant back to banking and B2C meant going back to consulting. So hopefully in this new world of innovation and digital financial services, we all stay in this area and none of us have to go back to banking, investment banking, or back to consulting. So thank you very much for that, because there's a few questions you've got going in my head here that I'm going to might come back to you on as well. So you mentioned the CFO and the horror in the eyes of the CFO. Charles from TransferMate, and just to put a disclosure out there, I am on the board of TransferMate where Charles works, and I know he's CFO. So I was smiling to myself there, Todd, when you were talking about CFOs. Charles, over to you, if I may, sir. We just spoke about B2B payments and remittances, an area where your business is an expert in. Now, I guess what I'm looking at you for is how are you seeing the evolution of in fintech of embedded finance, but really from the payments perspective? And I'm thinking about clients you must be working with in this area, suppliers and all the rest. Over to you, Charles.
Yeah, so I think so first of all, thanks for the question. I think embedded finance is definitely the next stage in the evolution of fintech, and TransferMate works with many firms doing embedded finance. Let me give you an example. So, for example, a leader in supply chain payments and marketplace has an application integrated with TransferMate. Of course, this app solution is used for commercial transaction across borders. This integration automates same-day cross-border payment services from commercial transactions anywhere in the world more accurately, securely, and with lower fees than traditional banks. Moreover, this TransferMate app eliminates complexity, improves speed, offers transparency and reconciliation, and help also to save time by allowing customers to complete cross-border payments transfer within the partner's platform. And to finish, TransferMate partners give their clients a smarter way to send and receive international payments while seamlessly integrating our technology to streamline the payment process.
Charles, and I just quickly add that all the panel members are happy to engage with the delegations. In particular, Ruth and Charles asked me to specifically mention that. I think Ruth is in France, and Charles, you're here in Ireland. Is that right? But obviously French extract.
So yeah, I'm French, but I'm based in Dublin. Yeah.
Right, so we wish you the best for the Six Nations. Yeah, so look, just want to jump into one or two of the questions that have come through before I continue on with some of the questions we prepared earlier. If I may call your name out, Nigel, at least I'll mention you by your first name. You asked the question, Nigel, how do banks feel about opening up their lending products to new brands on a white label basis? And who in banking and lending space is leading the move to manufacturing of these financial services? So how do banks feel about opening up their lending products to new brands on a white label basis? And who is leading this? I wonder whether I might jump to you first, Ruth, to have a stab at that if you'd like. And then either Krista or Todd, would you like to have a stab? And hopefully you can see the question.
Yeah, I guess you should ask the banks, but my sense is that
I want to follow the money, and I think the money. I always put more time for where the money's going to go, the VC money.
Yeah, no. I think there are a couple of interesting things on that point. So what we're seeing to stay on the embedded finance theme is that the place where you might most likely want to have a loan, a personal loan or a small business loan, might actually be at point of sale. And so, one of the things that or perhaps point of invoice. So, I think that one of the things that we're seeing in this kind of tech-enabled future is the ability for banks, but also really balance sheets, because that's really what we're talking about, is someone with a balance sheet and the ability to underwrite risk, offering customers, money where they need it and being able to assess their repayment capabilities where they need it. So whether or not banks are comfortable doing this, I think there's a recognition that the opportunity to provide liquidity to people, to small businesses, is really opened up in this new world. Of course, banks, have a huge role to play potentially as sort of the predominant balance sheets. But I do also see a lot of kind of emerging balance sheets which are taking advantage of, the kind of in situ needs of customers.
Do you want me to build on that, Peter?
Yeah, would you mind, particularly if you could throw any light on to who's actually leading the manufacturing of these financial services?
Yeah, absolutely. So, actually, I've been dealing with banks on kind of, I guess, reselling their products or wholesaling their products is effectively what we're doing for the last 7 years since I started at CurrencyCloud, and I think what I've observed over that time is a tremendous shift in the attitude of banks. And they're not all there. Like, to talk about banks as homogenous communities, obviously, it's not homogenous. You've got banks with high risk appetites, banks with low risk appetites, banks who are open, banks who are closed. I think initially the view of fintech in general, not just lending but across the board, was it's super high risk. These guys don't know what they're doing. They're technologists playing in the game they don't really understand. And there's almost like an allergic reaction, and the reason for that is banks are terrified about being commoditized, and they're terrified about becoming the dumb pipes in the background, while all the value accrues to the people who are providing the value-added services on the front end. And I think that's a real concern. I think that's a genuine concern for banks to go and wrestle with. The problem is that the banks don't operate in a unionized fashion, which is good news for us because what happens is some banks start to kind of, I guess, steal a march and move to the forefront of the movement, and they see the opportunity. And when they see the opportunity, suddenly what they're giving is all of the companies are providing these point-based services the ability to repackage, to value add, and to find new avenues for new channels for selling their products. And it becomes very, very difficult then for those banks who don't participate in that to kind of maintain their position of like, we're not going to deal with this model. And so there's been a tremendous opening up over the last 7 years, but it's a real roller coaster because my space is obviously more cross-border payments than it is in the lending space. But when things go wrong, the banks immediately retrench. And so, you'll have seen headlines earlier on this year about money laundering scandals with in the Baltics and in the Nordics. And the natural reaction of that, so both the regulators in the region, but also all of the banks that work with those regulators, is to say, do you guys really understand the risks you're taking? Do you really know what you're getting yourselves into? And they pull back. And they possibly overcorrect, and then over time they come back into the market, and then something happens and they pull back. And so you end up with a non-linear progression of banks' appetite to work in the space. But there is a very, very clear 2-step forward, 1-step back progression that's moving in the same direction. I think what's going to be really interesting in the lending space right now is a lot of the models that underpin lending have been written during 8 years, 10 years of basically uninterrupted economic growth. And as we move into more challenging times, those risk models are going to come under pressure, and it's going to become very, very clear those players who got it right and those players who got it wrong during the last 5 years of good times. And that's, I'm sure, going to throw a lot of challenges into the space, but I expect those challenges to be short-term, not long-term.
That's great.
To chip in, Peter, if you don't mind.
Please,
Please. So when Divido say that we white label, we basically let the bank lead with their branding instead. So we believe that the domestic bank, they have the brand knowledge, the brand trust, they have the relationships, the merchants and consumers. So it's not Divido slapping our logo onto them for them to take it to their customers. Is us helping them just from a technology perspective build their brand, but with our technology. And then in terms of who's leading this pack, I mean, we're talking with a big French audience. So one of the banks we've been working with the longest is actually BNP. they're not just very big in retail
Right.
finance, they're also very progressive in terms of partnering and working with third parties, fintech experts. We're also working with Santander, which is similarly progressive, and one of our big clients is Nordea, the biggest retail bank in the Nordics. So there's definitely a couple of big banks showing in actions how they're embracing third parties.
Yes, look, I mean, it does seem that the Dutch, the Spanish, the Nordics, and the French, the banks in those regions do seem to be very open to this sort of real collaboration, right? I mean, I think even TransferMate has an investment inside it from ING, a Dutch bank, so an Irish fintech. So they look outside their own jurisdiction too. And the point that was made there around that you made there, Todd, about the banks. I mean, one of the things I often hear from the banks is they would like to collaborate more, but their concern is that when they bring in these, in their view, untested and sometimes unregulated fintech innovations onto their platform, and they become responsible for anything which goes wrong through the addition of that company onto their platform, and then they have the headache with the regulator, and they often cite that for the excuse of not looking to collaborate. And then in the fintech's point of view, often it's that, well, hang on, these guys just want us to collaborate with them so they can get insight into our intellectual property, copy our idea, and then take that from us. But I think on both sides, both parties are relatively wrong, because at the end of the day, shareholders are the ones that want to see shareholder value. They want to see profits, right? And we've gone through a very difficult stage of the banks collapsing across Europe and then being recapitalized, and regulators demanding they keep their capital on their books, which means there's less money going up for investment. But you can sense the shareholders in this new environment are saying that we need to do more, and we want to see more. I'm also wondering about inhibitors and enablers for embedded finance. And I guess the easy one to start with is around COVID. So I just want to throw out to anybody there who would like to have a stab, has COVID been an enabler or an inhibitor of embedded finance in your personal view over the last 6 months?
I'm happy to jump in. I would say that overall, it has been an enabler. I would say that what we're seeing are a lot of the trends that were propelling us towards a generally more digital world being accelerated, and a lot of the parts of the financial services system which were extremely entrenched in sort of non-digital transaction being forced towards digitalization. And so overall a recognition from incumbent players that this process must be accelerated. I've also observed just the volatility actually has been, an extremely sort of a moment of lucidity for a lot of customers around risk and their ability to kind of handle balance sheet risk. So a lot of the insurtech companies that I've been working with, particularly that address the B2B space, are seeing a lot more interest in their products. Because there actually was a bit of a dearth of volatility in the run up to the crisis. I think it's it's going to have a dramatic impact on us, on the entire planet from a number of different perspectives, and it's going to be interesting to see, and possibly painful to see the economic contraction which is going to result from this kind of pretty tremendous dislocation. But I would say that overall, its impact on digitalization generally and sort of embedded finance specifically being something of an enabler.
Yeah. Okay. Thanks for that. There's I'm just going to call it out. Just we are at now 12. Sorry, excuse me. We're at 1:35 here in Ireland. Just to put a call out for any further questions that might come from the audience. I actually have still a number that I can go through. So if the team at Business France would like to throw any more questions up in the Zoom chat, feel free. Or if we need to turn to a separate Q&A session to bring the audience in, just let me know there, Elodie, or let me know, Pauline. But until then, I can just continue with the Q&As with our panel. Okay, so one of the things I would like to ask is, what are the non-financial industries which are seeing the quickest adoption of embedded finance? Now, we often, we talk about embedded finance, and often the first example is the selling of a good on an e-com site, and that's great. But is there any particular industries, healthcare, or anything like that we're seeing an uptake in embedded finance? Anyone like to have a stab at that?
I can provide one perspective on that. So obviously
Please.
we did retail finance, so helping consumers to make purchases by leveraging credit. And so it's credit for the exact amount that they're buying for a very specific period of time with a clear repayment schedule. And this industry was growing kind of 20% year on year, even before COVID. But now, because of the economic uncertainty, consumers are much more inclined than ever before to look out for alternatives to defer the cost, to spread the cost, to allow them to manage their budgets easier. And that's where I think retailers are kind of in the front line when it comes to embedding finance, because it has to be an integral part of the buying experience or the checkout experience. So that's something that we've seen, a trend that's become even more articulated thanks to COVID.
I get that. Yeah, thanks. Charles, if I might just bring you in on a quick question here. Have you noticed an uptick in the different sorts of clients now that are gravitating to your business? I suspect, like many payments companies, you had a lot of volatility when COVID hit. People were, and particularly those that trade currencies. And then, of course, we had reports from the World Bank that money remittances around the world, but consumer to consumer, were dropping. I'm just curious, in the business-to-business side, have you seen an uptick in companies utilising your services that you didn't necessarily expect to see before the COVID crisis?
I mean, I think now more and more companies are asked to transfer money internationally, and I think especially maybe smaller business, and but I think it has not been it hasn't been a big change in between before the COVID and after the COVID, I think. So I just think right now, and I think it will be the business will go this way. I think even smaller companies will have to transfer money internationally. So I think I can see a lot of small companies who have suppliers abroad, for example, in Africa or in the US, and it was maybe not the case before a few years ago, I think.
Yeah, okay. Now that's fairly interesting. I appreciate you going that. One of the questions, and look, forgive me, this is a bit of a basic question, and look, maybe it's over to Todd or Krista. What is the difference, actually? We've been talking about embedded finance, and we had a great introduction there by Ruth, but what is the difference between embedded finance as opposed to just reselling a financial service?
I guess I would illustrate it with the example of Spotify versus Apple.
Right.
So, in both cases, actually, what you've got is you've got a music streaming service who is selling somebody else's products, right? The products is the songs that are distributed by the producers, etc. And Apple do so in an entirely closed ecosystem. So, when I get Apple Music, I get it here on my device, and that's it.
Yep.
When I get Spotify, it's an open ecosystem. So I can play Spotify in my car. I can play it on my Alexa. You're going to find out how much of a gadget you can buy now, by the way. So my car, on my Alexa, on my Google Nest. I can play it on my laptop. I can play it on my phone. I can play it. It's ubiquitous. Play it on my television. I think that to me is the most simple articulation of what embedded finance is. It is the ability to consume a financial product in the way that you want to consume it at the point at which you want to consume it, totally embedded in the user journey, as opposed to something that is delivered as a point in its own right. And I think that to me is the difference.
Okay, that's great. Thanks. Appreciate that. And I guess it also means you get it right, you drive loyalty and brand stickiness, don't you? And that's
absolutely.
I presume the old rule still holds. Is it that a costs you 5 times more to find a new customer than it does to keep an existing one. One that used to be quoted. Ruth, we can't get away from this conversation with all these great companies here that are delegates. Brand Quad and Eco Tree and Lizzie and Chameleon, Milo, Mr. Surcat, and all these firms that are here. Because a lot of them obviously still need to think about the growth stage and the funding stage. So can I put you on the spot, and may I ask you just what are 3 things that you look for? What are the 3 things that Anthemis looks for, or in fact any investor, and maybe even you might want to jump in here as well, Krista, you look for in a business before you make a decision to invest, just to give the audience a little bit of a heads up?
Yeah, so I would say every investor pretty much universally is looking for a dynamic, experienced team building a needed product for a large addressable market. And I would say that at Anthemis, we think about things slightly differently, given the fact that we are sort of sector-focused experts. So I think we have a little bit more patience and a little bit more time for really sort of unique take on where the market is going. I think one of the most important things that we are really also spending time on is the diversity of the team. We feel like this is something that has really been overlooked by venture capital investors and also the financial services industry, really for centuries, and that there is an opportunity to remedy that by thinking about that as we put cash into businesses, both the existing teams and the founders' attitudes towards growing large businesses. This is because it's, there's a sort of ethical dimension to it, and there's also a business dimension. We tend to really see a high correlation between the diversity of the teams with also the kind of diversity of thinking about products and services for customers.
Okay. No, thank you very much. Krista, feel free to jump in on that one. I was actually going to tease you with the question that if a bank manager, a VC, or a private equity firm walked into the room tomorrow to offer you a sum of money to help grow your business, which one would you start the conversation with? But I won't put you on the spot unnecessarily, but I might ask you to have a think about that. But also maybe you might give us a few insights into what consumer trends you see driving embedded finance over the next while. And I'm just conscious we only have 2 minutes to go, so it needs to be a relatively short answer, Mr. Holloman.
Well, I think it's clear everything starts with the consumers, with whatever they want, however they want it. Retailers and banks just line up to service that need. So yeah, it's going to be integrated to everyday life, and that's where the embedded finance really comes to life, I think.
That's been very good. Folk, we are just coming up now to the last couple of minutes. I'd like to say thank you very much to all of you for your time today and for putting your thoughts together. Appreciate it both on the day and also the work you put in before the event. Obviously, the topic of embedded finance, we didn't really even get into discussing, in particular, banking as a service. And if we started to do that as well, we'd probably be here for the next couple of weeks. Another point we didn't really get around to discuss, but it was on the back of my mind, was around the regulatory environment and acting as a constraint. So I think if you're in the audience, first thing is do a bit more research on embedded finance. Look up people that have been on the panel today, particularly look at Ruth's white paper. And I think you'll find a lot more things of interest, and I think you'll spot the next growth cycle here in this particularly interesting area of embedded finance. So without further ado, I may just pass back over, although I have one quick question from Nikos, sorry. Would you consider investing in a startup with just one person, Ruth? Yes or no? Would you consider investing in a startup where there is only one individual involved in the business?
So I think the answer is, if you have a really awesome idea, Anthemis is happy to chat with you. And we do have vehicles which accommodate, pre-seed, kind of the earliest stage ideas, and at Anthemis. So that's the answer.
They're very good. That's very good. Particularly that person was Bill Gates or Steve Jobs, I would imagine as well. So listen, we've had a great webinar. I'd like to say thank you, Ruth, since you're on the screen. I'd like to say thank you, Krista, Thanks very much, Todd, especially for taking my bad joke at your expense. I do appreciate your sense of humour. And Charles, thank you very much for the insights on the payments world as well. So it's a good afternoon from me, and it's a good afternoon from the rest of the panel. And thank you for your time. And we look forward to being in contact with you in the next stage of the delegation, and all the best for the delegation. Thanks, everybody, and have a great afternoon.